Hello again, investing putts. Sorry it's taking me so long to make another video. I've been really busy at work, the real job. But I thought it'd be a good time to review the trading results for the D-volume and IV slope strategies that I showed about a month ago. I've been trading for a month and a day, and I started trading just as soon as the market entered into its most significant correction for a year. So timing wasn't too good, but still, I'm only down about 3% versus the SPY being down 5.4% over that month. So here's a P&L breakdown of the 7 stocks I'm trading. SPY, IWM, and ARK have gotten hammered. GDX, FXI, EEM, and USO are flat to uptrending. So unfortunately, my position size with these uptrending shares is pretty small, so it can't really make a big dent in the drops in SPY and IWM, which are my largest holdings. To jog your memory, the IV slope strategy uses the implied volatility term structure as a signal. So specifically, the term structure is how the IV of the options varies versus days to expiration. So typically the SPY IV term structure is in contango, meaning that the longer dated options have a higher implied volatility than the short dated options. So when the markets are stressed, that situation flips, and the IV term structure often goes into a backwardation, which is the other way around. So for the case of SPY, I define the IV slope attribute as the IV at 70 days to expiration minus the IV at 15 days to expiration. And this definition varies depending on the underlying. Here's a scatter plot of today's IV slope versus tomorrow's stock price return. So we want to know how today's IV slope predicts tomorrow's price action. So through backtesting, I determined that the stock does best when the IV term structure is in backwardation or slightly in contango. So backwardation means the IV slope is negative. Contango means the IV slope is positive. So if you look closely at the points, you'll see that the big up outlier moves, which are the days you don't want to miss, occur when the IV slope is negative. This makes sense since the last year was a crazy buy the dip mentality. So whenever there was a short period of market stress, SPY immediately snapped back up onto its 30% upward trend. So here's a 1-year back test of this IV slope indicator. So when the indicator is on, you get a noticeable edge over just buying and holding. The magenta dashed line shows when I started trading, so about 30 days ago. The system told me to stay in the market pretty much the entire time. So again, the market has been stressed for the last month, and the system, which was trained during the time of buy the dip, is telling me to buy the dip. So if the market regime has changed into a different mentality, then I could be in for disappointment trading this strategy. So now on to the D volume strategy. I define D volume as today's volume minus yesterday's volume. Very simple. So I'm plotting today's D volume against tomorrow's percent change in the stock price. So again, through back testing, I determined that when today's D volume is positive or slightly negative, it produces a positive expectancy. So again, this is explained by the buy the dip mentality. So when the volume increases today, the stock price typically drops today, but because we were in a buy to the dip mentality last year, after a big drop today, it's going to usually snaps back tomorrow. So that's what you see here. So tomorrow's positive outlier moves occur when today's D volume is positive. So here's the buy and hold SPY P&L in blue versus holding SPY only when the D volume signal is on in yellow. So there's a noticeable edge. Again, the dashed magenta line shows when I started trading the strategy. We've suffered through the worst correction in a year, so it's hard to know if buy the dip still holds and we're going to snap back on that trend. I kind of suspect not. Here's a plot of the D volume and IV slope signals every day that I've been trading for each of the 6 stocks that I use for with the signals. When a cell is colored blue, it means that the signal has changed from one day to the next. So it means I should change my position the following day. So the devolume strategy forces me to go in and out of the market a lot, which is getting on my nerves, to be honest with you. And less so for the IV slope signal. The IV slope signal is on less frequently for most stocks. It's a lot less volatile, it seems. So, this plot tells me that the devolume signal especially may be fitting noise. I would hope that the signals would only be kind of keying me into longer term trends. So I may, in the background, may research some improvements that at least try to find a signal that tries to find longer term trends, not have to trade so much. So I'm just going to go through the performance of each of my holdings over the last month. Here's SPY. The baseline is the red curve, which is just buying and holding 50 shares. So my result is similar, but I seem to have a slight apparent edge. On IWM, I have more of an edge. The signals are, because IWM has been flat in the last year, the signals seem to discriminate more accurately for this stock, but I still haven't been able to avoid the drawdown, compared to buying and holding 40 shares. ARK is a stock that's absolutely gotten hammered over the last several months, really the last 6 to 8 months. It's not a stock that I particularly like that I would hold because I wanted to, but the system seemed to have some power in backtesting, so I'm trying it. They provided me with a decent edge, but it didn't keep me out of the market entirely. And there's the stock was net down over this time. So the signals have done pretty well on FXI, which is a Chinese index ETF. FXI has actually gone up in the last month, a few percent, while the SPY is down more than 5%. So Chinese stocks have gotten battered in the last year, and maybe they've bought them. Funds are starting to rotate into international stocks out of U.S. stocks. So the system seems to work better on stocks that had a lot of ups and downs over the backtest period, which was a year, as FXI did. EEM is the emerging market sector ETF. The stock has been flat over the last month. For a while, it looked like the signals were giving me an edge, but for now, it's about a break even. So anyway, a month really isn't long enough to know if something's working or not. With this system, every day is an occurrence, so that's good. So I have 30 occurrences, but I think 3 months is kind of where I'm going to draw conclusions, yay or nay. Like I said, I probably will in the background be looking at methods to kind of keep the signals from fitting noise. I want to tease out longer term up or down trends with these signals. So they probably do have some merit, but it's questionable whether it's enough merit to bother trading it. So anyway, I hope you enjoyed it. If you got questions or comments, as always, leave them in the comment section, and I'll see you in the next video.